Alright, hey everyone, this is DayTraderRockStar for the S&P 500 update and outlook for this week going into August 23rd. Also, excellent educational video that will come with this. Basically, what I want to do is take a look at the S&P and go out and say, alright, why are we looking at the S&P 500? Well, basically, it's a large range of stocks, 500 stocks that, make up this index, and it gives us a nice wide range in the markets. It's better than following, 60 stocks or 100 stocks or 30 stocks. 500 is a good round. You could also use smaller cap stocks like the Russell 2000, but I like the S&P 500 because it's a good basic general outline of the whole, all the different sectors. Now, you could get into a stock. I just want to talk turkey here. You could get into a stock, and the stock could be a great stock. For whatever reason, an analyst could come out, could downgrade it for valuation purposes, or one day, what I see all the time is one day an analyst comes out, downgrades a stock. The next day, another analyst comes out and upgrades a stock. So it's not an even playing field for individual traders, homegrown traders trading at home. You're dealing with information that's not going to be standard information. You might have a great stock, but for whatever reason, it's pulling back. Intel, greatest quarter in 40 years, everything great, blowout quarter, it's pulled back all the way down to $19. No rhyme or reason. So it's going to go back up, but again, there's no rhyme or reason sometimes to the market conditions. So what you have to do is you have to understand looking at the markets. You have to look at them, and you're going to say, all right, where's my highest probability of the market moving, where I could get into the market and make my money. And that's why I use my 5 indicators. And I think this is a great breakdown of the S&P 500 this week because I took out all the lines, and I just wanted to show you, just started showing the reversal candlesticks that start to pop up. And a reversal candlestick for me is pretty much a hammer, where you have a long tail, a reversal on the day off the lows, and we close up in the upper part of the range on the daily. And what I want to see is that reversal candle coming to where my other 4 indicators are lining up. So if we go back and review the indicators, we have stochastics, which are the full stochastics 1433, and I want to get these stochastics down into an oversold level before I start looking at a stock, or that I'm going to be buying a bounce play. Remember, these are usually short-term swing plays, so I'm trying to get the best bounce possible for the best bang for the buck. So I'm waiting for those stochastics to get into an oversold level. At that point, I also want to make sure that there is a recognizable pattern or a trend line underneath this that's giving us support. So again, the indicator would be stochastics, then any underlined trend lines. And trend lines could be a downward trend line, upward trend line, something underlying the price level. Then moving averages, the 20, 50, or 200 exponential moving averages. And then chart patterns, basic chart patterns. So if I see a channel, that's going to be a pattern for me. I could take a channel and just make a little channel from here to here and from here to here, and that would be a channel for me, something to key off of. So now I'm working on oversold stochastics, a reversal, actually lower trend line, in a channel which develops support and resistance, previous support and resistance going out to February. All these things are lining up and giving me multiple indicator setups here, and that's why we're going to get this little bounce here. Again, same thing back here. We got oversold. Remember, bounces don't last. These stocks and the stochastics are an amazing indicator to use. And when you learn about the divergence between the price levels and how to measure lower lows and higher lows versus the stochastics, that's when you're going to notice the change of trend. But right now, we're just going to talk about each time the stochastics get down into an oversold, do I have other indicators underneath me saying, hey, this is a great area to look. And again, stochastics, trend lines, moving average, chart patterns, support and resistance, and the last one, the sixth sense, is the reversal candlestick. So whenever you see these reversal candlesticks and they line up exactly the same level, that is your high probability moves. So right now, look what we have. We have a nice pullback, and on Friday we had this nice candlestick. Now, why did we get a candlestick there? Well, for whatever reason, we track this every week. So I was watching the rise and wedge pattern we had. All right. So the rise and wedge pattern, we called this a couple weeks ago. It was very, it's easy to see. And when we saw that breakdown, I explained to you how to make a measured move target from a for a rise and wedge. So here's your wedge pattern, two trend lines moving up and making that upward wedge pattern. You look for that breakdown to the downside. Now, to get the breakdown, you take the largest part of the wedge pattern to take the distance between that, and I measure that out, and you put that where the breakdown comes. And that brings you down to a measured move area. That's where the target should be for a first significant bounce on this pattern. That brings us down to that 1066 to 1065, 1067 area. And that's exactly where we moved down to on the S&P. And we did that on Friday. We hit it. We bounced off of it. It was actually a classic textbook pattern. And now that the stochastics are back into an oversold level and we're starting to bounce on the 60, this looks really good for a bounce area. So again, the 60-minute and the daily chart really line up well together, and that gives us that measured move down here, gives us a reversal candlestick on the daily, gives us oversold indications, except the stochastics are a little skewed here because they're starting to turn over. But I did some back testing here, and I went back over here, and we saw this nice reversal candlestick, and the same exact situation here where the stochastics got overturned here, but then we just quickly recovered and bounced the next few days. So we're going to see what's going to happen. I want to see this follow through. So everything, again, here's your downward channel, here's your upward wedge pattern, here's your breakdown. Now all of a sudden you can see this new candlestick that came into play. And again, what you're going to ask yourself is, do I have multiple indicator setups that are going to go with this channel, with this candlestick? And again, let's break them down. Stochastics, yes, we did. We had oversold stochastics. We had a recognizable pattern, which is right now an inverted head and shoulders pattern, but we actually came back down out of a measured move. We have the reversal candlestick. We have support, which goes back out to May and June, July, and all the way out to February. So all these levels lining up for a good bounce area here. So looking for this bounce to happen this week. I think we're good. We're set up nicely. And that's how I use the combination of the 5 indicators plus the reversal candlestick to measure, to measure the market and see the best possible and best highest probable area to make money in the market. All right, so this is DayTraderRockStar for the S&P 500. I'll be tracking this tomorrow, every day, on the radio live and on the webcast at daytradingradio.com from 9 o'clock to 4 o'clock.